Welcome back to America Tonight. We've talked a lot about this great segment for It's Your Business. We're coming up on the end of the year. People are kind of scrambling around trying to look for receipts, figure out what they're doing as far as taxes are concerned. Now, I know some of you are much more streamlined and organized, but I still know a bunch of pretty successful people, frankly, who have a garbage bag full of receipts, and they're trying to figure out what's kosher, what's not, what to look for, what are the write-offs, all that kind of stuff. So Joe Mastriano's in our virtual green room. He is the CPAs of CPAs, and he is going to knock down some pretty big questions for us. Joe, thanks for popping on the show.
Oh, glad to be here.
Seriously, you're a lot of people listening to this show, and 90% of businesses are made up of what we call small businesses, 500 employees or less. And as I said, some people, and you know this, or you probably have clients like this, they're really organized, they get it, you've taught them a few things. But let's say you're headed into this process and all your friends are telling you how they have this write-off and they have that write-off, and don't forget to take this write-off. And I think sometimes people cheat themselves in the opposite direction. What do you see as some of the biggest things maybe, Joe, people in small business forget to write off? Not the paper clips and the pens and the mailings and all that stuff, but is there some big deductibles maybe that people miss?
People don't have the right approach. It's amazing. I've been in business doing tax returns for over 30 years and helping people with IRS problems. And what people should do is, as it gets to the end of the year, they need to do a sample tax return. People pay a lot of money in interest and penalties because the fourth quarter's estimate is due January 15th. And a lot of people think, oh, well, I have withholding, I don't make quarterly estimates, when if they have additional taxable income, one of the spouses has a side business, or they have profits in the stock market, the awareness of what goes into the return is critically important.
That's good advice, to do the sample tax return. Now, when somebody you put somebody's taxes together, or somebody does it themselves, let's say it's people doing it themselves, and this is what everybody's afraid of. Everybody's afraid of being audited. What are some red flags that could get you audited?
A lot of people aren't aware that there's free downloads, like TaxAct or some companies will allow you to download for free a full tax return. And if individuals would just put their W-2s and information in the return and they see how much they would owe, then it might frighten them, and it would cause them to go back and look for more deductions. And with the Internet now, you can just Google end-of-year deductions that you might miss, or changes in the tax law. I want to say the government has gotten very sneaky about that. This year, hidden in the Health Care Act is a 3.8% net investment income tax. So it's important to go down the list and check them. Now, as far as auditing, that's the key thing for everybody. You do not want to be audited. I have seen, I get calls every now and then from people who went to the IRS with their CPA, all their receipts, invoices, and canceled checks, and the IRS is still denying the deduction. They're still targeting Schedule Cs, all your small business taxpayers, and they're making us feel like we're guilty and we're cheating and leaving it up to us to prove otherwise. So I'm going to give you my four-part program on how not to be audited. And I will, yes, I don't know one person who has followed this 4 parts who was audited. It's that strong. Number 1, you file an extension. The extension takes you to October 15th. Number 2, don't file the return until about a week before that extension date. So forget about your quick refunds. It's not worth being audited. Then by August, the end of August of each year, the IRS has on file the W-2s, 1099s, and K-1s that people file on you. And you can contact them, or my CPA firm does it for people, and you want to know what they have on file for you. because their matching program, if you don't match those numbers on your return, they will audit you. And when they audit you, they look at all the deposits in your checking account, even your personal account, and they make you prove that it's not income. Gifts from family, money you took out and redeposited, all that has to be proven. So, number one, file the extension. Number two, file it a week before October 15th. Number three, match, get from the IRS everything that's been filed on you for the year, and match those numbers on your tax return. Number four, and this is where a lot of people go wrong, they hire these tax preparing shops at the end of the year that are going to give them the biggest deductions. And for years I've been preaching, hire a licensed law firm or a licensed CPA firm, because it requires having a knowledge of the tax laws beyond just reading the tax guides and finding out where to put the numbers. So when you have a tax return that's not a very simple case of a W-2 and maybe you itemize, but especially Schedule Cs, the IRS is going to question your mileage deductions, your entertainment deductions. You might as well have that return footnoted. For example, if auto mileage may seem excessive, you want to say taxpayer understands the code and the regulations involved. Taxpayer has all the evidence and documentation. Taxpayer understands the deduction might be high, but it was an ordinary and necessary deduction. And you want to actually footnote the heck out of the return. So if they do select it, they'll put it back and go after somebody else, because you're telling them you're aware that it might not be the obvious situation, but that you have all the proof and evidence and understanding. They might as well go chase someone else who doesn't.
Wow. And so by doing this, as you said, you've done this with clients, you've done it long enough, you've seen that it really is almost foolproof, huh?
Yes, and other CPAs I know as well. Nobody can predict the future, what the IRS might do, but so far over the years, we don't know one person who has done this who has been audited.
Wow.
Correct.
What do you think is the biggest, so that's obviously, those are incredible. There you go, folks. There's four things right there, plus some to also download a form yourself and do it so you know what the numbers are. What's the biggest mistake you've seen most people make, Joe?
The biggest mistake is people will still send in a return and play dumb as to why the deductions are there. They'll have phony Schedule Cs, they'll go to preparers, and they won't take the responsibility for what's on the return. And if the deductions look too good to be true, they probably are. And we defended... Yeah, go ahead.
Go ahead. You defended somebody that was in this case?
We defended many people in audits that came to my office who had no understanding what was on the return. There's a guy who was arrested a couple of years ago that prepared returns, and we've represented several of his people, and one of his favorite things was he would ask people, have you helped plan any parties for your friends? And if they said yes, he would put them down as a party planner business on the Schedule C and start taking a bunch of deductions. Employee... I'll give you a good example, too. And here, again, the difference between proper professional help and not. Employee business expense. If you're an employee and you have union dues and you need special clothing, there's expenses that you can itemize to take on Schedule A on the itemized deduction form because they're necessary expenses that you have as employees. But the auditors have changed what they want for that. They want you, if they audit you, they want you to get from your employment division in your company a statement saying that your job requires you to spend that, almost so, you couldn't have the job if you didn't have those expenses. So people put those expenses down, not realizing the level of documentation required. And it's terrible. I see families, contractors, they take in a lot of money for materials, building materials, and they're barely feeding their family. They're left with, $30,000, $40,000 for the year. The IRS comes in and they disallow documents for the cost of the materials, and they now have another, $20,000 of taxes to pay, and they're barely making it in the first place, and they're legitimate expenses.
Wow. Wow, crazy stuff. All right, this is great advice. Joe Mastriano, we'll have to have you back on again. Killer IRS representative down there in Houston. Check it out. You have a website. What website can we go to?
Well, they can just Google Killer IRS and get to it, but the website is taxproblem.org. It's one word, taxproblem.org. And we have a free download on the website with very valuable information, many of the things that I've discussed.
All right, awesome. We'll check that out. Joe, thanks so much for coming on America Tonight.
Oh, I'm glad to be here, and I'd love to come back and share more stories and more tips so that people are not victims.
Yep, we'll do it again. Thanks, Joe.